Hello again, it's me, Steve Walker from Promise Money, and today I'm going to be talking about offset mortgages. So what is an offset mortgage? Okay, imagine you are self-employed and you occasionally have some cash lump sums coming in, or you're a property investor and maybe you need cash for a while because you buy and sell property, so you need cash to do a refurbishment, but when you sell the property or remortgage it, you've got cash coming back in again. So rather than you putting that cash back into your bank account and getting a really low rate of interest on it, wouldn't it be great if you could earn effectively the same rate that you're paying on your mortgage? That's really what an offset mortgage is about. You're taking the cash that is your savings and you are putting it into an account, so it reduces your mortgage amount. So if you've got £100,000 on your mortgage and you've got £25,000 in savings, you put that into the offset account and that reduces the balance by 25,000, so you're only paying interest on a lower amount. So effectively you are almost paying yourself that amount of interest. Think of it that way. You're paying yourself the amount of interest that you get on your mortgage. But the great thing about an offset mortgage, which is different to other forms of finance in many ways, is that because you're in control of that money, you're putting it into that current account and it's offsetting your mortgage and reducing your interest. If you need it again because you're in business and you need to go and buy some stock or something like that, or you're a property investor and you've seen another property you want to buy, maybe you need a deposit, or maybe you need to refurbish it before remortgaging or selling, you can grab hold of that cash, use it yourself, and your mortgage balance goes back up to where it was and you pay what you were previously paying on your mortgage. But to use your own cash in a way that you might have previously used bridging finance is an awful lot cheaper than bridging finance. So it's a really, really good product. Now there are some pros and cons, I guess, that come along with this. Pros, obviously, if you are taking a chunk of your own cash, and it doesn't have to be just your cash, by the way. I think with some lenders you can have up to 3 family members that you can put money into this account to reduce your mortgage balance. Or to reduce the amount of interest you're paying on your mortgage rather. So that means you're paying less interest on your mortgage. If you roll that forward, because you're paying less interest on your mortgage, you're potentially paying it off sooner because you're reducing the balance faster. So you could keep paying the same repayments and your mortgage balance will be paid off sooner. So that's another advantage. And some lenders even allow you to offset in current accounts using an ISA, so there can be a tax advantage in there as well. Downside, well, okay, the downsides are, well, by using the offset mortgage, especially in a buy-to-let scenario, because you can secure an offset mortgage on a buy-to-let property or on your main residence, but in a buy-to-let scenario, it could change the bracket that you're in for paying tax. So you just need to take tax advice on that. But the most obvious disadvantage of an offset mortgage, whether it's a buy-to-let or a residential mortgage, are that there are less lenders doing it, so the rates might not be quite as keen. And because there's less lenders doing it, you might not be able to get as high a loan to value as you might have previously achieved on that mortgage. But focusing on the positives, if you've got £50,000 that you need from time to time, you've got the cash but you want to invest it, then if your mortgage rate is 2.5%, where are you going to get that on your savings? You know, put it into an offset mortgage. When you need it, take it out. So it's almost like the reverse of an overdraft, really. So it's a great product. All I would say is if you're considering an offset mortgage, you really need to talk to a broker about the offset mortgage alongside the other options, because it might be that you decide, well, I'll go for a regular mortgage rather than offset because maybe the rate might just be a little bit better. You might not have that much cash. You might not need that. Might not have that flexibility that you want because the cash chunk that you've got isn't really enough to make it worthwhile, or you might need a higher LTV. So it's got to form part of an overall assessment of your circumstances when you're taking out a mortgage, remortgaging, buying property, or whatever you're doing. So that's it on offset mortgages. Check them out. If you've got a query, do get in touch. Please like our videos, subscribe to our channel. Please subscribe and check out the other videos on our YouTube playlist. There's an awful lot on there. We've got videos about secured loans, we've got videos about commercial mortgages, about bridging, about regular mortgages, so there's a lot on there. So please subscribe and check it out. That's all from me today. Thanks very much for watching. Bye bye.